Alright, good morning. Thank you guys so much for tuning in to another live stream. Today is January 21st, 2025. And let's dive into the weekly Forex fact, or just the weekly news here. So coming into Tuesday, we don't necessarily have any news drivers today. No important news drivers on Tuesday. However, we do have unemployment claims here on Thursday, and we have President Donald Trump is speaking here on Thursday as well. And on Friday we have flash manufacturing PMI and flash services PMI numbers. So today we have a rather uneventful day. Not much volatility will be injected due to not much market news. But yeah, going into the daily time frame, I don't really have a bias because yesterday we did have a a bank holiday, so we closed pretty early yesterday, right at 12. So I don't necessarily have a bias coming into today. I guess I do want to see us take out previous day high. I'm not too sure why it's not showing up, but yeah, I do want to see us take out previous day high here. But I'm not too convinced. It's like I said, because it's a bank holiday, I don't want to force a bias. I'd rather just sit on my hands and allow a clear cut objective for it to be presented, right? So on the daily time frame, I'm not gonna really force anything. So I'm just gonna wait on the 4-hour time frame and the 8-hour time frame to close. So depending on how we close here on this 4-hour candle, so if we create a bullish closure on the 4-hour candle and this 8-hour candle, I'll be more inclined to really choose a higher time frame directional bias, right? But right now, I'm not going to really say anything. I'm not too sure if we're going to continue higher or lower this morning. But yeah, let's give it I would say about 24 minutes or so until we close, and then I'll really confirm. But yesterday we did complete the weekly objectives though, so that is something that you do want to keep in mind for. So this was previous week's this was the previous weekly candle, right, where that black line is kind of going towards. That was the weekly candle last week, and with the way that we closed, I can anticipate for the weekly high to be taken. In the weekly high, I'll make it green. So that green line was my weekly objective. I wanted to see prices take that weekly high out, and then after that, I can no longer use the weekly time frame as my as an objective, right? I can't use it anymore because its objective has already been completed. And however, one thing I do want to note is that on the bi-weekly time frame, notice this candle right here. That bi-weekly candle power of 3, I can anticipate for that bi-weekly high to be taken, right? And I'll make this a green line. So that green line is my bi-weekly's objective, right? I want to see that green line get taken. So 21,897 is I want to see it get taken. However, now that I know that on the bi-weekly time frame at least, higher prices should occur, I want to align myself with that bi-weekly time frame or that bi-weekly order flow. And how that's going to happen is if I can find some sort of entry pattern, or I want to see how we close here on the daily candle for me to align myself with that time frame, right? That higher time frame. So depending on how we close here on the daily candle will tell me if we're going to attack the bi-weekly high or not. Because as of right now, we do have SMT between NQ and ES. ES took out the bi-weekly high here. So we took out that bi-weekly high. NQ has not yet. So there is SMT. And if we are going to reverse, this is where we're, right? This would be a logical place for us to reverse here. Very, very, very interesting. Yesterday's trading day was not that bad, actually. It was a pretty, even though it was a bank holiday, there were some models that were present, and I'll go over that with you guys here. They were rather clean, to be honest. I mean, I had everything that I looked for, so if you guys been with me for a while now, I'm always looking for a higher time frame objective, right? What does a higher time frame wants to do? And higher time frame could be the 30-minute, it could be the 4-hour, or it could be the weekly. Because every single candle has an objective, you can essentially find a higher time frame objective on any time frame. But let's just say you're trying to find a higher time frame objective on the 5-minute time frame. What's your model relative to the model? What's your model relative to that higher time frame objective going to be to the 5-minute time frame in this case, right? Are you going to take your model on the 1-minute time frame and have your entry pattern on the seconds? I don't know, but to me, I'm not really comfortable with trading in such lower time frames, like I guess such micro time frames. Seconds, I don't really mess with that. But I mean, every single time frame should be treated the same, right? They're fractal. It's just that's just not something that I really dabble in. So going into the trades that I took yesterday, right? My higher time frame objective for the first trade that I took was based on this bi-weekly candle. So like I showed you guys on NQ, we had a bullish bi-weekly candle, meaning that bi-weekly candle, I can anticipate for its high to be taken. And on ES, same case. Notice this power of 3 here, right? This candle, this up close candle, I can anticipate for its high to be taken. So that's my higher time frame objective. I want to see higher prices. I want to see prices attack that bi-weekly high. And for me to align myself with the higher time frame objective, right? In this case, the bi-weekly high, I'm going to go from the 2-week time frame to maybe the daily to maybe the weekly. So the model that I took to align myself with the higher time frame was based on the weekly and was on the weekly time frame, right? So notice this weekly candles. Notice how we created there. We created a bullish weekly candle, and with the way that we close, I can anticipate for the weekly high to be taken. But one thing that I do want to note is how the weekly high and the bi-weekly high are two complete different highs. This is considered an expansion model, right? So I'm taking my model here based on the weekly time frame, and the whole idea of an expansion model is that after we complete, in this case, after we complete the weekly objective, after we take out the previous week's high, we should expand higher towards the bi-weekly high. There's a reason for prices to continue even higher after taking out the weekly high. So weekly objective, higher prices. Bi-weekly objective, higher prices. But one key thing to note here in this specific trade is that the daily time frame, Friday's closure or Friday's high of day is the same high as the weekly high. So this means that we should complete the weekly objective within the next day, right? Because the daily high is the same high as the weekly high, I can actually treat the daily time frame as my model instead of treating the weekly time frame as my model, if that makes sense. And this idea is called scoping. It basically narrows down a time frame and it tells you when we should complete the objective, right? So instead of us completing the objective within a week, we should complete this objective within a day, or in a time range, right, between a day. So I have my higher time frame objective, I have my model. The last thing that I'm looking for is an entry pattern. And oh yeah, one thing that I kind of did skip over here is that because I'm anticipating for the next weekly candle to take out the weekly candle's high, that means I'm anticipating at least an up close candle, right? Or a open, low, high, close. And let me draw that up for you guys just so you guys can see what I'm talking about. A open, low, high, and close. And in this case, I want to be a buyer. I want to be a buyer below the weekly open. So that's essentially buying in discount. And yeah, that idea is buying in discount, right? It's taught by ICT, and ICT was taught that by Larry Williams, I believe. If you're anticipating an up close candle, it is recommended that you buy below the weekly or buy below the open of that candle, right? ICT applies that concept with the daily time frame, but if you treat every single candle as the same, right? Every single candle has an objective. Every single candle it's fractal. If you treat that with the, I guess in this case, the weekly time frame, then buy below the weekly open. And in this case, my entry patterns here today, or I guess yesterday, was based on this 10-hour fair value gap here. So notice how I'm going from bi-weekly higher time frame objective to the daily model to a 10-hour fair value gap. I'm not going from the weekly to the 1 minute. There's like, I'm taking it one step at a time, right? Bi-weekly, weekly, daily, 10-hour, one step at a time. If you skip over, like, that's like reading from page 1 and skipping all the way over to page 30 in a novel. You're gonna miss out on like 30 pages worth of information. You're not gonna know some of the characters that got brought up. You're not gonna know the plot line. What's the, so that's essentially what I'm doing here, right? Bi-weekly, weekly, daily, 10-hour, taking it one step at a time to really understand what's really happening here. So like I said, I take my model based on this 10-hour fair value gap, and the way that we created this 10-hour fair value gap could be treated as a gap that gets rebalanced, right? I'm anticipating for prices to trade into this 10-hour fair value gap and then expand higher. It should be treated as support essentially. And I'm buying below the weekly open. So here, weekly open, I'm buying below it. So I'm buying basically when prices are going to manipulate. And coming into like the London session, we actually manipulate lower here. We had SMT between NQ and ES. And then bam, we took out previous week's high. We took out, so like I said, previous week's high and previous day high were the same highs. And then we continue to expand higher towards the bi-weekly high. So that was, this is like a trade where like everything I looked for was present, and all I did was click the button. Wasn't that difficult. Yeah. One key thing that I do want to note here as well on this specific slide is that from this swing low to this swing high, so that's essentially what the retracement is, right? We retrace back inside this 10-hour fair value gap to expand higher. If you take the standard deviation projections from this swing low to this swing high, that -1 standard deviation lines perfectly with the bi-weekly high. This is what I look for here. If a standard deviation projection aligns with existing liquidity, it makes it more of a probable target for prices to hit, right? This just makes more sense it just makes more sense that prices should take out this high. And yeah, very, very, very I can't say ideal, but this is like everything that I look for, right? Higher time frame objective, I have my model, I have an entry pattern, and I'm able to explain to you guys my thought process, how I broke it down, right? And yeah, that was the first trade, I guess, this week and yesterday, and it was based on the daily time frame. So this is more of like a swing trade. It's not typically the types of trades that I do take, but like I said, prices is fractal. If you apply the same concepts to multiple time frames, you're gonna end up with the same thing, right? It's just, it might take a little bit more time for an objective to be completed, but the same thing. And you'll see how fractal prices is here in the next breakdown. But I'll explain the next breakdown in 10 minutes or so, because one of the, I guess, improvements here that I have to make is that I'm going to be present in front of the markets here actively present in front of the charts at 9:50 or 9:50 Eastern time, 8:50 my time, Central time. And yeah, let's get right into the charts here. So let's see if where ES is doing. Let's see. So ES took out Asia's high of day, whereas NQ did not. And NQ almost took out London lows, and ES is nowhere near it. So I have a feeling that we're going to have SMT here between previous day high, possibly. We'll see. But I'm not really gonna force anything here, to be honest. I don't want to force a model. I'm just gonna wait until we close here on this 8-hour candle and this 4-hour candle for our bias. And if we close with a rather undecisive closure, the easiest decision to make there is just sit on your hands, right? If you're not completely sure where prices wants to go, if you're not completely sure what the objective is, then why force anything, right? There's no need for you to force a model that isn't even present. There's no need to. So here, like I said, I'm just gonna wait for the time to pass by and to allow me a more probable conditions. But yeah, if I'm anticipating for the bi-weekly high to be taken, I do want to be a buyer below the weekly open. It's just, there's no model here for me to align myself with the bi-weekly high. The only time I guess I could consider taking a model in accordance with the bi-weekly higher time frame objective was yesterday on NQ. So I would have probably taken this model here, something like this, and I move my stops to break even after we take out previous week's high, which is this candle's high. But I ended up taking my model here, I guess yesterday, yeah, on ES, because ES was relatively closer to bi-weekly high than NQ. But yeah, I mean, I have to rely on the daily time frame to be in a to I guess to trade in accordance with the bi-weekly objective, but not really. We haven't even closed on the daily candle yet. We're still technically trading actively, so I'm gonna have to use intraday candles such as the 4 hour, the 6 hour, the 8 hour, the 10 hour, or the 12 hour for an objective, right? Um, but it's not that like, even though every single candle has an objective, some objectives might not be clear. So if it's not clear, then no need to force anything, you know? And let's just see. Let's just see. I do want to see how cold it is outside right now. I have school coming up later, and it's 24 degrees outside in Texas. Wow. Look at that. We have tomorrow, it is a high of 52 degrees. Today, it is 24 degrees. It's rather bipolar. Very, very bipolar. But it looks like it's warming up after today, to be honest. So Wednesday, we have a high of 52, and then Wednesday night, it's 27, and then Thursday, yeah, it looks like it's warming up. Hopefully it gets a little bit better. Doom, 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 doom. Alright, so it looks like we could possibly trade lower here. Let's see. So with every swing high and swing low, right? And this occurs on every single time frame. There is a dealing range here, right? From this swing high to this swing low. So let me make it visually apparent for you guys. So from that swing low, from that blue line to this blue line here, I'm going to name this a swing high. Swing high. And this is going to be swing low. Swing high and swing low. With every single swing high and swing low, there is a creation of a dealing range, and within a dealing range, there's an equilibrium level, right? So basically, essentially, the halfway point of this high and this low. Anything below that equilibrium level is considered discount, right? Anything above the equilibrium level is considered premium. So let's see here. So I'm gonna make the red box premium, the green box discount. So if you know that prices are continuing lower here, technically you'll still be selling in premium, and you want to target discount because buyers, the whole psychological, like the whole reason behind this concept is that buyers, they want to be buying in what's considered discount, and sellers vice versa. Sellers want to be selling in premium. So if I know that if there are buyers here present in this market right now, right, they're going to want to reach below this little range right here, below this, they want to reach into that green box. So if I can take a short into the green box, that's a higher time frame objective. There are four reasons why prices moves. We can either consolidate to generate liquidity, we could expand towards liquidity, which is basically the example that I showed you guys, that breakdown earlier. There's rebalance and inefficiency. And rebalancing inefficiency is basically retracing back into a fair value gap. And the fourth thing here is to retrace into the equilibrium into premium / discount. So if we're creating a bearish bias here, right, in this case, the reason why we should continue lower is to trade back into discount, right? Into discount between this swing low and this swing high. So we'll see how that goes here. But that's essentially what I am considering right now. But that all depends on how we close here on this 15-minute time frame. If we can, so right now it looks like the 30-minute, the hourly, the 4-hour are suggesting lower prices. Once we close here on in about a minute and 30. But the 15-minute time frame, it's not completely sure. I'm not completely sure what this 15-minute candle wants to do, right? So even though the 30-minute, the hourly, the 4-hour is bearish, the 15-minute isn't essentially isn't in alignment with the 30-minute, hourly, and the 4-hour. So I have to wait until the 15-minute is in alignment with the 30-minute, hourly, and 4-hour. And yeah, that's kind of what I'm looking for. So let's see, we have 50 seconds left here on this candle's closure. 50 seconds left till we close here on the 4-hour and the 8-hour. Seconds left. Let's see. 10 seconds left till the closure of the 4-hour and the 8-hour candle, and I guess the hourly candle as well. How are we going to close is the question. So it looks like, yeah, the hourly is, the way that we close on this hourly candle is rather bearish. Like I want to see us take out the hourly low. Same thing with the 4-hour and the 8-hour. One thing that we are lacking is displacement. We don't really have much, we don't really have a bearish like fair value gaps to support lower prices, right? We do have this one, but it's rather like, it's not, I don't want to say it's not that strong, if that makes sense, right? This gap here is a gap that could be rebalanced. If it were to be a gap that shouldn't be treated as a rebalanced gap, or I guess it should be treated as a breakaway gap, then it will suggest even like we're going to be heavy. But in this case, the way that we closed here, this gap is to be treated as a gap that gets rebalanced, meaning I could see prices trade back inside here and then possibly continue lower. But that's not as bearish as I want to see it, right? And to, like I said, the way that we close here on the 30-minute, the hourly, the 4-hour, it's suggesting lower prices. But with the way that we close here on the 15-minute time frame, I'm not convinced for lower prices, because it's telling me at this current moment we might not be bearish. We might have a different objective here on the lower time frames. So you always want to align yourself with, you want to align the lower time frames with the higher time frame. You want to align the higher time frame with the lower time frame. There's that. And we could just end up just like shooting lower too, which is completely fine. And like here on ES, we're not, it doesn't even like suggest higher prices or lower prices. I can't say that we're going to go lower or higher here on ES. I'm not convinced for either side, which just makes it more of a reason for me to sit on my hands and just practice patience and discipline, right? But going back to my trade journal here, so as I was talking about how fractal prices is, right? I took a model yesterday on the daily time frame. Literally like an hour later, yesterday, I was able to align myself with the 15-minute time frame. So in this specific model here, so this model, so the previous trade that I showed you guys, it was considered an expansion model, right? In this model, I'm anticipating for prices to retrace back into the premium. So just like the concept that I just went over, where there's premium in discount, buyers want to be a buyer in discount, sellers want to be sellers in premium. In this case, I am trading with the whole psychological thought that prices wants to trade into premium, so that sellers could possibly sell in premium here, right? So from this swing high to this swing low, there's a dealing range, and I got the equilibrium level, and then now I understand where premium and discount is. And notice how this 15-minute candle here, with the way that we closed, it's bullish. And why should prices continue higher after taking out the 15-minute high? It is so that we could retrace back into premium. So my higher time frame objective here is for prices to retrace back into the premium of this 15-minute dealing range. All right. My entry pattern. So we have created this 1 minute fair value gap here, and we continue to respect it, right? We just kept digging, and like, notice this consolidation. It's just consolidating back and forth. And once we close here on this 15-minute candle, so if you guys can see my mouse, this 15-minute candle, notice how that 15-minute candle closed, right? Very, very bullish closure. I can anticipate for the 15-minute high to be taken. And why else should we continue higher? To retrace back into the premium of the dealing range, right? So with the way that we consolidated here, I feel like this is just waiting for the right time for prices to complete its objective. And so once we opened up at 11:15, that's the time, and this is the time and price, right? 11:15, the opening price of the 11:15 candle. We opened above the 1 minute fair value gap. We trade back inside it. That's when I took my entry, and I'm targeting the 15-minute high and the retracement into the premium of the dealing range. And notice this 15-minute high here is, if you guys take a look at it yesterday, and yesterday was January 20th, 2025, by the way. So if you guys take a look at what happened yesterday, it was a perfect equilibrium. So this high is literally equilibrium. So, and this is an example of how prices is like super, super accurate. It's exactly at the premium level of this dealing range. So it just makes it, there's more sense for us to take this model, right? So higher time frame objective, 15-minute retracement into premium. The model, 15-minute candle. The entry pattern, a 1 minute fair value gap. All of those requirements were present, right? And my entry pattern will always be a fair value gap. I don't take entries on like order blocks, breaker blocks. For me, it's a lot easier to see what a fair value gap is than an order block or a breaker block. I've always thought those concepts were a little bit too subjective. And if you guys can, like, if you guys are studying ICT, you guys might have seen this pattern where swing low, swing high, lower low, higher high. Then this up close candle here should be treated as a breaker block. And yeah, it's super, I don't know, it's really subjective. So what I like to see is fair value gaps, because fair value gaps are easier to see, and it's the concept of a fair value gap makes sense, right? Prices is showing you some sort of displacement. There's some sort of entity. There's some sort of like algorithm that's really wanting to see a certain direction be in play here. So in this case, prices wants to continue higher, right? And there's been displacement, meaning there's a willingness to continue higher, and that's when I took my entry at the fair value gap. And yeah, that's, like I said, perfect. All the requirements were met. All I did, press the button, and that just shows you how fractal prices could be. Like I took a trade here yesterday on the daily time frame. After the daily time frame's objective's been complete, I can no longer use that time frame, right? I have to use the intraday time frames. And so intraday time frame could be the 30-minute, it could be the 4-hour, it could be the hourly, it could be the 6-hour. And as long as you understand what the candle's objective is and what, you know, your higher time frame model, or I guess higher time frame objective is going to be, you'll be fine. And with that, those are the 2 trades I took yesterday. Pretty simple. Not really much for me to really go over anymore, to be honest. But I guess I do want to cover.
Mấy giờ Thanh đi đây?
Tôi đi học 11:45.
Mẹ đi làm, Thanh đi đâu?
I do want to go over the pros and cons with you guys, but before that, let's see if there's anybody in chat, because I haven't really checked anything out yet so far. So let's see, has there been any comments or concerns? Let's see. No comments. Okay. Completely fine. All right. So going into the pros and cons here from last week, what should I continue doing? Last week, every single trade that I took, I had a higher time frame objective, I had a model, and I had a entry pattern. I'm able to explain to you guys what, if I go over any of these trades from last week, I can identify what the higher time frame objective is. I can explain to you guys what it is. I can explain what my model is, what my entry pattern is. And that just builds consistency, right? If I'm able to take those consistent trades, right, that's only going to benefit me. And that's something that's in my control as well. I can't control the outcome of a trade, but I can control how I execute. And if I can continue to take consistent models where every single time frame every single trade isn't exactly the same, but they have, you know, similar characteristics, like I said, higher time frame objective, model, entry pattern, then that's only going to benefit me. Second thing, implemented standard deviations for further targets, right? So instead of targeting just existing liquidity, I have standard deviation projections for even further targets. And if standard deviation projections, like the one that I showed you guys previously, if they align with existing liquidity, that being sell side or buy side, that just makes it more of a probable target. Third, stay patient. So, you know, today, if there's no model that's presented, that's completely fine. That's something that's not in my control, right? I can't control if there's going to be an opportunity or not. However, I can control how I execute. yeah, I'm never going to go out of my way to force anything to happen. It That's kind of, I guess with that approach, it's delusional, because if I was a market maker, if I literally controlled how prices works, I would not be doing this. But yeah, I have to accept the fact that I don't control the markets, and that the only thing that I can control is how I view prices, how I execute. What can I work on? When analyzing a trade, don't do it frantically. This just kind of refers to, if you guys were present in last week's live stream, you guys would have seen how I was doing these pros and cons. 10 o'clock hit. I'm scrambling. I'm like, okay, well, there's a model here. What's the higher time frame? Oh, I see a higher time frame. There's a model. There's entry pattern, and it was just super, like, I guess, chaotic. So, coming to this week, I'm gonna try to be present, or I'm going to be present at, I guess, 9:50 Eastern time, and all I'm gonna do is actively be present in front of the charts, right? No pros and cons, nothing else, but solely viewing price action. Second, I guess the second and third two things that I can work on isn't solely trading focused, but it's like, I guess it's more of a lifestyle as well, where, I guess, let's just get into it. So the second thing here is to maintain focus, right? On the specific task at hand, whether that be you're at school, you're at work, what I'm doing right now, you're at the gym, anything. You got to give it your all, and you shouldn't be distracted by anything else, and solely give your entire being to that task, right? And that's only going to build, there's this idea of momentum. If you disrupt that flow state, like let's say you're in the gym and you're like, you can feel the tension in your muscle with every single rep, and you're like completely in the zone, and you decide to go, I don't know, you decide to go on your phone or something. And I hate going on the phone whenever I'm at the gym. It just it literally, like, gets me completely out the flow, and it's just weird. I don't know, it makes me feel weird, but continue. I'm gonna try to work on, and I will practice the idea of focus, and building up that momentum, and not allowing that momentum to be disrupted, right? And finally, aligning my thoughts and actions with my values and goals. A common question that I feel like everybody should ask themselves is what I am thinking or what I'm doing in alignment with my goals and values? Are they going to benefit me in either way? Yeah. Let's see. Improvements. Being able to identify and explain to anybody what my higher time frame objective is. I should be able to explain it to myself, and if I'm able to explain it to myself, I should be able to explain it to anybody. What my higher time frame objective is, what my model will be, and what my entry pattern is. Is there a fair value gap present? Consistent models, right, and executions. This is something that I can control. The outcome of the trade is something that I am not in control of. Second, actively watching the markets, being completely present at 9:50 a.m. Central Time. And yeah, that's basically all. Let's see, back to the charts. So we do end up completing that objective. So we completed the 30-minute objective. Like I said, I wanted to see lower prices. And the hourly, the 4-hour, they all suggested lower prices. And why else should we be continuing lower? We should continue lower, right, to retrace into equilibrium, to retrace back inside that discount of the dealing range. And what did we do? We just did that. But I wasn't able to take a model because, like I said, the 15-minute time frame wasn't in alignment with the higher time frames. But sometimes there are going to be cases when when this happens, right? Where you're not given a model. I understood what the higher time frame was, or I understand what the higher time frame objective was, but a model wasn't present, right? And if there is not a model, I can't take a I can't try to force something to happen, right? I can't force an entry pattern to just appear. I can't force a model to appear. But the higher time frame objective was present. The other two weren't. Simply, I just had to watch the charts. Nothing else that you could have done there. And yeah, that's. I mean, now the morning objective has been complete. I no longer have. There's no longer a reason for me to rely on this 4-hour time frame. So here, I'm just gonna close the charts. Actually, there's no reason left for me to really like pay attention to it, unless we can like use the 30-minute time frame or the 15-minute time frame for some sort of like higher time frame objective, like I showed you guys in the second trade yesterday. But yeah, it's okay. I think that's just gonna, I'm gonna spend a lot of time. So what I do want to do is always, the last thing here is to ask ChatGPT for a daily Stoic quote, right? So let's see, daily Stoic quote. What's the quote gonna be? He suffers more than necessary who suffers before it is necessary. I don't understand that. He suffers more than necessary who suffers before it is necessary. Anticipating troubles. Seneca warns against the human tendency to overthink and worry about future hardships before they even arrive. Oh, he suffers more than necessary who suffers before it is necessary. Okay, so this makes a little bit more sense. And this idea is overthinking. Oh, this actually I can relate to. Often our imagined fears cause more pain than the actual event ever will. Living in the present. This quote encourages us to focus on the present moment rather than being consumed by what might happen. By doing so, we conserve energy and emotional strength for challenges that actually arise, so objectively arise. The way that I feel like the Stoics, they have a really objective way of viewing like life, right? Super objective. There's no subjectivity in the way they view things. It's very concrete, right? There, done that kind of thing. Practicing mindfulness helps us recognize when we're engaging in unnecessary suffering, redirecting our focus to what is within our control rather than dwelling on uncertain outcomes. Empowers us to face life with resilience. So like I said, the only thing that should be on your mind is what is within your control. And the example that I showed you guys is with trading, but literally this is like a life thing. If you can't apply the concepts in the discipline, if you have discipline in trading and you don't have discipline in real life, there's this that I think that's like almost fake, because you can't be disciplined in trading and not be disciplined in your real life. It should go hand in hand, just like the indices. They go they should be trading in tandem with each other, right? You should be in tandem with this and your internal. I'm not exactly sure what I'm trying to get at is, but even Miyamoto Musashi too, right? The way of the sword is the way of the life. He can't be a master swordsman if all he does is practice swords, like I guess swordplay, and not be a I don't know how to explain it, but there's a quote. If you just read Vagabond, you'll understand what I'm trying to talk about, what I'm trying to convey. And I'm gonna post this into the Discord, and yeah, today is January 21st, 2025. There you go. Yesterday's quote was basically the idea of momentum mori. Alright, and yeah, I think that's gonna wrap it up for today's live stream. Thank you guys so much for